What's up, everyone? Welcome back to Big Markets Think Simple. So here's a question. Why is the entire world suddenly obsessed with space? Not long ago, space industry meant NASA. It looked cool on TV, sure, but it felt completely disconnected from our daily lives and definitely from making real money. That's just not the case anymore. Right now, Elon Musk's SpaceX is gearing up for an IPO, and the valuation being thrown around, $1.75 trillion with a T. Meanwhile, stocks like Rocket Lab are moving like crazy every single day. Serious money is flooding into space, and it's not slowing down. So what's actually going on? Did people just suddenly catch rocket fever? Is Mars colonization really right around the corner? Here's the real answer. Space is no longer science fiction. It's become a massive, legitimate industry, one that's tied directly to your money and your everyday life. Today, we're breaking down why the space industry suddenly looks like a money-making machine and what SpaceX and Rocket Lab are actually doing at the center of it all. Let's get into it. This video is not investment advice. It's for educational, entertainment, informational purposes only. I'm not a financial advisor. Please do your own research before making any investment decisions. Any investment decisions are your own responsibility. When most people think SpaceX, they picture a Falcon 9 sticking a landing back on Earth, objectively one of the coolest things humans have ever done. But SpaceX is way more than a rocket company. It's a vertically integrated space empire. Launch, Starlink, Starshield, and Starship all connected. The Falcon 9 carries up to 22.8 metric tons, roughly 60 satellites in one shot. What used to be expensive single-use hardware is now functioning industrial logistics equipment. In 2025, SpaceX launched 165 times, capturing 51% of all global launches and delivering 85% of all mass into orbit. NASA crew missions, Pentagon payloads, commercial satellites for competitors like Amazon, SpaceX is handling all of it. But here's what makes SpaceX genuinely different. They don't just wait for customers, they create their own demand. That's Starlink, a low Earth orbit satellite internet service. No cables needed, broadband anywhere on the planet. And here's the flywheel that makes it almost unfair. Most satellite companies pay a launch provider to get their satellites up. SpaceX builds the rockets, builds the satellites, and sells the internet directly to end users. They're the factory, the delivery driver, and the retailer all at once. More launches drive down costs. Lower costs allow more satellites. Better service attracts more subscribers. Round and round it goes. The result? Over 9,300 Starlink satellites in orbit, 65% of all active satellites on Earth, over 9.2 million subscribers across 155 countries, with 4.6 million new customers added in 2025 alone. Starlink already accounts for 61% of SpaceX's total revenue, and unlike one-time rocket launches, it's a monthly subscription, a utility bill that keeps showing up. On top of that, Starshield brings in major U.S. military contracts, and SpaceX is investing $17 billion into direct-to-cell, letting regular smartphones connect directly to satellites without special hardware. Revenue grew at roughly 45% annually from 2020 to 2025, hitting $18.67 billion in 2025. All that Starlink cash is being funneled into Starship, a rocket 5 times more capable than Falcon 9, designed ultimately for Mars. But the risks are real. Competition is intensifying. Amazon's Kuiper and OneWeb are closing the gap. Orbital congestion is becoming a regulatory headache. Starship hasn't been commercially proven yet, and the cash burn is hard to ignore. Despite $18.67 billion in revenue, SpaceX posted a $4.9 billion net loss in 2025, with $20.7 billion in capital expenditures. The growth story is compelling, but the spending is just as aggressive. SpaceX is the dominant force, the infrastructure layer of the new space economy. But there's a scrappy, disciplined competitor carving out ground beneath its feet. Unlike every other company that tried to compete head-on and disappeared, this one survived and became the clear number 2. That's Rocket Lab. Rocket Lab's survival secret is simple. They never tried to out SpaceX. If SpaceX is a freight company running 18-wheelers, Rocket Lab is a precision courier on a motorcycle. Their Electron rocket carries small satellites up to 300 kilograms to low Earth orbit. SpaceX's rideshare is a shared city bus. Cheap, but you don't pick the route or the schedule. Rocket Lab is a dedicated private car service. Your satellite, your orbit, your timeline. For defense agencies, Earth observation firms, and research institutions, that flexibility is worth the premium. In 2025, Rocket Lab launched Electron 21 times with a 100% success rate, firmly locking in the title of world's #1 small launch provider. But Rocket Lab's real business isn't just the rocket. The more important piece is space systems, designing and manufacturing satellites and the components inside them, attitude control systems, solar panels, communication hardware, missile warning sensors. By 2025, a significant share of everything that went to orbit had a Rocket Lab technology inside it. Space systems represent 60 to 70% of total revenue. Rocket Lab is fundamentally a space supply chain company. Launch, build the satellite, operate it end-to-end.
end. As the space industry grows, satellite demand explodes, and so does demand for hardware and systems. Rocket Lab is sitting right at that intersection. Their big growth card is Neutron, a 13-ton reusable medium rocket targeting a first flight at the end of 2026. If it delivers, Rocket Lab moves from the small launch niche into a much bigger market. The financials show clear momentum. 2025 revenue hit $602 million, up 38% year over year. Q1 2026 came in at $200 million, up 64% from the same quarter last year. Backlog sits at over $2.2 billion, providing strong forward visibility. But the risks are real. Rocket Lab is still unprofitable, with continued losses driven by Neutron R&D. Neutron is already behind its original schedule. Further delays would create real financial strain. And if SpaceX gets more aggressive on rideshare pricing, cost-sensitive commercial customers become harder to hold. Bottom line, Rocket Lab isn't trying to build a global internet constellation. They're the specialized supply chain powering the entire industry. Rockets, satellites, components, sensors. If SpaceX is building the highway, Rocket Lab is making sure the most precision-sensitive cargo gets delivered exactly right.
Let's close with the two people behind all of this. In 2001, Elon Musk flew to Russia to buy a refurbished ICBM. He wanted to send a greenhouse to Mars to inspire the world. The Russians laughed him out of the room. On the flight home, he ran the numbers and decided, I'll build the rocket myself. SpaceX launched in 2002. 3 consecutive rockets exploded. The company nearly went bankrupt. He put everything into a 4th attempt. It worked. Rocket Lab's Peter Beck had a completely different path. No college degree. He taught himself rocketry on a factory floor in New Zealand. He applied to internships at Lockheed Martin and NASA, all rejections. So he built his own way, founded Rocket Lab in 2006, and in 2009 pulled off the first privately funded orbital launch from the Southern Hemisphere. 2 totally different backgrounds, same fundamental belief. Space isn't just a dream, it's the next great infrastructure market. The space industry is no longer sci-fi. It's a multi-trillion-dollar build-out happening right now. If today's video helped you make sense of it, hit like and subscribe. See you in the next one.